Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It is Monday, July the 11th, and it looks like the market is holding nicely. I just wanted to, before we get started, show you. Oops! Oh goodness gracious! Always have an issue with TikTok. Let me see if I can get that back up. Hold on one second. Oh yeah, yeah. Okay, let's see. Let's see. We're just gonna start over there. Try to get it back. There. Okay. Sorry about this. I should have this down by now. I've done it enough times. It just sometimes it just doesn't quite line up. So I'm going to be getting right back on. Here we go. There we go. Okay. So thanks for holding there. We're back up on TikTok. And for everybody looking on TikTok, I am simulcasting this on YouTube. So that's where you're going to see all the charts and everything like that. And I just kind of, unfortunately, with the with TikTok, we can't see the charts, but you definitely can see them on YouTube. So the easy way to do that is go to my profile, click the link, scroll all the way down to the bottom, and you will see the live YouTube feed that we're doing right now. So without further ado, let's get into some of the slides. All right. Well, basically, what's going on here is that we are, we're moving very well, and we're continuing in that uptrend. I want to show you three stocks that are right at a pivot, and this is a good time possibly to consider getting into them. The first one is DocuSign. Now, I've been in DocuSign for a while. I kind of wanted to show you this chart. I've been in DocuSign since this pivot with this reversal, which is this line here, and I've just kind of ridden it up. I have it in the small portfolio currently, and I'm up basically 24% on it in about 36 days. But it has come and it started to break out, and there is a buy point here. Just wanted to show you this, so we are really good to go right at about 290. Here is a very good area to possibly get into it. It's at 288.12 when this was taken. The volume's a little bit weak, but I do think that we're going to punch through this buy point, and then it could be possibly a very, very good trade. So the one I kind of want to bring your attention to, it's DocuSign. You've probably heard of it. They're very big, of course, in the legal area. I've used it many times to buy and sell properties, believe it or not, and I probably will be using it again as I'm selling a house that I have in California, and hopefully it's going to be it's a little bit complicated because it's held to trust, but DocuSign has really kind of moved into this area, and I do think they have a lot of potential, and I think that they may even they may even double. Who knows? But at least is what the chart is saying right now. It's moved above that very, very critical level. The intermediate high was 275. It's surpassed that. It's right up against the buy point, and it's moving into a good buy zone. So above about, I would say about 290 is a really good place to be looking, possibly to get into DocuSign. So that's one I kind of want to show you. There's another one here that I also bought today. It's a little bit you probably well know. You probably know it as well. It's Roku, and it is a cup with handle formation, which is one of the best formations out there, really. And it's a buy basically at about 432. Now I know these stocks are kind of expensive, but here's what you got to do when you're dealing with a relatively small account, because I do trade these in a relatively small account for demonstration purposes, and basically what I wanted to share with you is it. The only thing that matters on a stock really is the percentage gain or loss that you have. So the way I like to buy them is when they're getting ready to break out. I want to buy them at the very best place, and then ride them up. And then if it does pull back on me, and sometimes that happens, I want to get out quickly, with a 2 or 3 or maybe a 4% loss, no more than that, to preserve my capital. If you do this on a regular basis, you're going to get very, very good results, and I will show you exactly, as I've been trading, some of the things that I'm into in this time frame. So let me show that to you first. Then I also have another one, and that we'll come back to here. It's an oil stock, but I just kind of want to show you the allocation currently that I have in my small portfolio. Now, I am almost 100% in cash now. It's been taking me a while to find enough stocks that were right at the buy point, and I did as they came into the buy point. That's where I bought them, and I bought them in position. So here's how position trading works. If you have a portfolio, let's say that's worth $8,000, you divide that by 8, and that's going to be basically 8 pizza slices. And that's kind of the way I think about it anyways. And what you do is that you move into a position, basically either in a half position, full position, or sometimes if it's really good like DocuSign, then you might want to, move in with several full positions. Currently, for DocuSign, I'm basically up about 24%. And this is about in 30 days, so about 36 days. So not too bad. What I'm going to be probably doing now is, as it's coming out to about 24% up in value, I'm probably going to start selling some of it. I'm going to sell half the position probably this week to take the profits, and then I'll let the rest of it ride up. Also, we have Microsoft in the portfolio. That's doing pretty well, up about 5%, and that's really only in about a week, so a little bit over a week. And that's the advantage of buying right at a buy point. You're going to get that very nice, if it moves correctly, you're going to get that very nice bounce. Also, I'm in Nike, same thing, bought that at the right buy point. So the buying at the right buy point is absolutely critical. If you can continuously buy at the right buy point in an uptrending market, you're going to get some very, very good results. And that's kind of what I want to show you. Also in CrowdStrike, it's only up 2%, but it's a very good area that I'm in the market in there. Apple, we're up about 5%, and that's in about 2 weeks. And then another one called Santander Consumer, and what that is that's an auto loan company. We're only up about 1%. We're basically even with Roku. We bought that today, and we're down slightly with this company, Climax. Basically what it is it's an energy company that is going to be merging with Callum Petroleum. And I kind of want to show you the chart on this one. This one I did buy today. It's right at a buy zone, and it's looking very strong. Now, one of the reasons I bought in this area, Climax Energy, would say, why would you do that? Well, part of the reason is because this is the number one category. This is the number one sector of the economy right now. The number one sector of the economy are these oil companies, the E&P, not the big oil companies like Exxon and Valero and the companies like that, but the companies that actually find the oil. And this one is doing quite well. It's right in a buy zone, and that means that it's a very good time to buy it. And as you can see, it's been consolidating here. And then this is how a stock typically trades. It'll trade down and up and down and up. Basically, it'll bounce off the consolidation, and then, but once it moves beyond the buy point, then it's moving to a different level. Currently, this stock X, which symbol is XEC. This has a relative strength of 96. That means this is in the top 4% of all stocks. So this is one you might want to take a look at as well. Just kind of want to put that out there for you, for everyone. So getting back to the way the market is trading right now, the market is definitely trading very, very well right now. It's in it's an uptrend, and the key level on this is 14,000. We're currently at 14,028, which makes this very good. So basically, the movement of the capital is moving into the big cap, the big cap tech stocks primarily. So we want to be focused right now on buying the bigger cap stocks, because they are showing the best, they're showing the best performance overall. So that's how it's moving right now. The S&P 500 is up just slightly. The Dow Jones is also up. The volume's down a little bit. It's a little bit weak. We're in the summer doldrums. Typically in the summer, the volumes are not as high, and definitely, we're beginning the summer doldrums really from about mid-July through about August and Labor Day. So that's something to keep in mind as well. Just wanted to kind of give you a rundown of my positions of the stocks that I'm in currently. Now, not all of them appear on the small portfolio because I have several different portfolios that I trade. I'm in Apple, which is very good. It's moving up very well to a very The key level on Apple is 147. Currently, it's trading at 144, so it's moving very, very nicely. It moved very nice, very decisively above the 137 buy point. So Apple it's getting almost too far extended, but it's still buyable. But you got to be careful here. Also, CrowdStrike. I'm in CrowdStrike. Symbol CRWD, and they're a very good cybersecurity company. They're off a little bit today, about less, down a little about a percent, but still going quite well. And of course, we talked about DocuSign. DocuSign currently is at 288.65. It's up about 63 cents, but it's just maintained strength all through. Now here's one that I bought several weeks ago that I really like. It's not in the small portfolio. It's in another portfolio. It's called L Brands, and it's in the retail space, and it's up very strongly today, 4.76%, or about $3.50. So this is looking very good. Some of the retail stocks are some of the best stocks out there right now. Really recommend you taking a look at L Brands, which is symbol LB. Also in Marvell Technologies, this is a chip company. It's up slightly today, about 20 cents or 0.36. Doing quite well on that as well. But it's a smaller chip stock. As everybody knows, I've been heavily in Nvidia. I've been closing my positions in Nvidia. Primarily, I've sold all my physical shares. I did close a spread. It was called a butterfly spread. I closed that today. I do have a call spread on Nvidia that I probably will be closing as well. And they're doing quite well as well. They're all in a profitable position. I want to take profits before July 19th because I do think there will be a bit of a pullback, but then with Nvidia, I think it's probably going to go higher as well. In Microsoft, it's off just a tad, just 50 cents. That's been doing quite well as well. And Nike has been also a very good stock for me at 161.93. So I'm in that as well. And of course, the two stocks that I did move into today are Roku. It's up about $2.49 a share, or yeah, about a little over 0.5%. And then this Cinemax Energy, and of course, they're announcing a merger with Callon Petroleum. This is also in the number one category. I have a half position in this. It's at 75 right now and doing quite well. So up about 97 cents, which considering the price is not so bad. So that's kind of the wrap up for how I'm trading today. So without further ado, let's get into some of the questions. And I know that a lot of people have been waiting, so I appreciate that. All right, questions on BYD. BYD is an interesting stock. Build your dreams. It's heavily owned by Warren Buffett. Now, it does not trade on the American exchanges. It trades in Hong Kong, and so I don't have as much information on it as I would certainly like to. But let me see if I can find out kind of a little bit more about this. Again, it trades it trades on the Hong Kong exchange. So let me bring this stuff up for that. I need the symbol for it. BYD, Build Your Dreams. Of course, this is an electric vehicle company as well, and it's an ADR. Oh, I guess it is. Okay, so so it's BYD. DY. Okay, so that's the symbol that it trades under. So let me get that up here. And bring this up as we speak. All right. Oh, there we go. Okay. Up right now. And see if I can move this over here in just a sec and get that up for everybody. And this is for BYD, Build Your Dreams, BYDDY. Okay. Well, it didn't come up there. BYDDY. I guess I'm just looking for that symbol now on Build Your Dreams. So let me see if I can get the correct symbol. And I'm just pulling it up right now. Huh, okay. No, I don't. No, that's Bayside. Build your dreams. BUILD. Alright. Okay. This is BYDDY, I get, no? Limited company. Okay, there we go. Okay, so let's see if I can get this. Okay, the price is $29.95. BYDDF. Alright, that was my mistake. Alright, let's go there. Alright, finally getting to the right getting to the right screen here. Okay. There we go. This is BYD company, and really don't have much to say for this one. We did have it does look like it's the beginning of a golden cross, which is this is a very good thing that it is happening. If this red line moves above this black line, that means that the stock is being accumulated in the short term. And we had a very nice the relative strength line is doing quite well. Let's see if we can draw a line across that relative strength line. Yeah, unfortunately, we still have quite a bit of overhead supply. That's what I'm doing here by drawing this line, seeing kind of how it's trading relative to the market. It had been trading very much above the market, but now it seems like it's getting some of its mojo back, but it's moving quite well. But here's the thing, I probably would not be a buyer of this until we got to about 35. That's my guess here. So what I'm going to do here is I'm going to kind of notate this chart a little bit to see kind of where we want to be. And I think that really we have to be really at the all-time high. So this is where I would start buying it. But I wouldn't wait. I would wait for an all-time high to buy this one. But watch this for now. And I'm just going to put the date on there. There we go. Okay, so that's kind of what I would recommend here. I think we really have to be up. I think we really have to be up a little bit higher than we are. I think we've got to be up a little bit higher than we are really to buy this. I want to kind of look at the checklist to see, kind of where we're going. It's got a decent checklist. 65 isn't bad, but you know what? I think that you're really better off waiting for the right buy point for Tesla. Let's look at Tesla, and that was a question from everybody that's looking on the in the chat room right now, in the Discord room. TSLA, of course, is the symbol there. Now, here's the interesting thing about Tesla, and I think you really have to concentrate on Tesla. Where I want to buy Tesla is right about this reversal line here. So that's kind of where I want to be. So what I'm going to do is I want to kind of look at this to see Tesla finally made some good movement. I really want to be looking at possibly buying Tesla if it moves above about 705. So we're starting to see some strength again. Here's the issue, though, with the automobile manufacturers. They're the last place. They have the least amount of strength. They're 179 out of 179. So I'm going to be looking to be a little bit careful. So here's the thing. I would watch this BYD. I would watch this BYD. I might consider getting into it, but only if it makes a new high. So BY DDF, of course, is the symbol, and so I would really only be looking to make a buy on, this if it moved above this line. So here's what I'm going to do. I'm going to put an alert on that line, and basically if it moves above that, then I think we can buy it. But right now we're still way below its all-time high. The reason this is so important is because we do still have some overhead supply here. There's people that bought up here that are holding on that haven't sold yet. So as it moves closer to this level, we will see that overhead supply take it out. So I think you just really have to watch this BYD right now. I think that's just really the best bet on it because it just doesn't have. I don't think it has it has the right setup. So it seems like a good stock, but right now I think we got to be very careful and consider not not move on it right now because the sector is very weak right now. We want to see leadership from Tesla first before we buy any of the other Chinese stocks that are in this area. I think that's really the issue. Do you think it's a smart idea to stay away from the market a bit? Well, Gator fan, most people, a lot of, right now we're in a confirmed uptrend. Now, I don't think, it's a stock picker's market. Okay, I'll be honest with you. There are many stocks out there that are just going to get you in trouble. I'll be honest with you. So it's not as easy as it was before. I mean, this really kind of is where we separate people that are chart readers and chartists and stock pickers from basically people that have done very well and but maybe a little bit more of it's luck. I think the market is very good now. I'm trying to move into the market right now. I was out of the market. I was about I would say 30 to 40% in cash, and I'm trying to find areas where I can move back into the market. I will take a look just at the general composite for the Nasdaq, and this is really important. We're still moving very nicely up up the 10-day line. So this is a very bullish thing. So at least for right now, we're bullish. Now this may break, but right now I think we're at the almost near all-time high. Now is it do you ever want they tell you get in at the all-time high and then you get screwed. But I just want to show you this chart. This is the monthly chart of the Nasdaq. And I know that people will feel contrary to this, but we are still in this uptrend. I mean, we're in this uptrend, and it will end eventually. I mean, it probably will end. It probably will end sometime. But for right now, we're in an uptrend, and therefore, it really behooves us to be in the market. And so, I still think it's a good time to be in the market now. When there was a pullback, I was lightening up and then, selling and moving to my winners, but I still think we're in a good shape, at least for right now. Now, that said, it's a stock picker's market. Not all the stocks in the NASDAQ are going up, but many of the big cap tech stocks are, and those are ones that we ought to concentrate on. So right now, I know that it's kind of a weird thing, but right now I think it is a good time to be in the market. And but remember, you got to have your stop set, and that's the key, is to protect what you're going to be doing. All right, well let's look at Nvidia, and of course, as everybody knows that's been watching this channel, um, Nvidia basically is moving up to a 4-for-1 split, which is going to happen on the 19th of July. And right now, we bounced off that 10-day line and we're moving back up. I do think, currently we're at 820. I do think that there is resistance at about 830. I am starting to close off my positions now. I have sold all my physical shares and I am closing my spreads. Now, what I'm doing is I'm going to be waiting. See, we're only a week away from the 2-for-1 split, the 4-for-1 split. So I'm going to probably be out of Nvidia by the end of the week. I'm going to be all my positions are going to be closed, and then I'm going to wait to see how it trades through the split. My guess is it will trade down. It will move up into the split, and then it will move down. And if that's the case, I'll be back in, because I still think it's a great stock. But remember, it's going to split 4-for-1. So therefore, anybody that's a holder of one share right now will end up with 4 shares. Now, you would think that that would make it worth more, but typically, the way I've studied stock splits, typically there is a pullback as people readjust their portfolios. But then, because it's a good stock, it'll start moving up again. But what's great about this is it's going to move NVIDIA into a very good range. It's going to be a $200 stock as opposed to $800 stock, which is very, very nice. So if you've been following along with me, we got in basically as at the reversal, then we bought more at the pivot. That's this 400, the 640. Then we rode it all the way up, and then we had a little bit of an issue up here. We're kind of topping out, but we're starting to see the top out. But again, once it splits 4 for 1, I think that we might be able to get back in. I'm currently selling into strength here, trying to liquidate my position as much as I can and profit from that as much. But that's a great question. It's very, very good. Do you think CrowdStrike will go up? Well, I do own CrowdStrike, and I definitely think it's in a very good area. CRWD. I think it's at a very good point. It's in the buy zone right now. It did kind of pull back a little bit today, but it is still doing very, very well. As you can see, there's a buy point on CrowdStrike at 251.28. Now, what do I mean by buy point? Well, here's how a buy point works. Stocks don't trade; they don't go up or down in totally up or down. What they do is they kind of go. It's sort of like think of a stock as sort of like an elevator that goes from floor to floor. Well, what a buy point is when it moves above kind of the normal range of this, and it pushes through, and then it gets to another level where it has some support. That's definitely the case with CrowdStrike. As you can see, as it pushed beyond 251.28, it kind of got some support. It kind of got some support. So now it's kind of resting and it's starting to move up this 10-day line. Now, once it's above, once it's above about, let's see, about 265, then it'll become extended. So if you're looking to possibly get into CrowdStrike, this is a good time because it is making a higher high, and that is always a good time to be in a stock. I'm going to go back to the monthly chart of this, and as you can see, CrowdStrike has been a fantastic stock since it debuted in 2019. It's basically moved, and it's now at almost its higher high. Now, here's something I want to kind of point out to you. And I don't know if you can see this, but on my charts, but as you can see, back in 2020, the end of 2020, CrowdStrike made a higher high, and that was at about 249. Well, it's at 261 right now. That means it's moved beyond that higher high, and it's breaking new ground. So this is very bullish for CrowdStrike. CrowdStrike currently has 88% checklist, which is excellent, by the way. 100% would be better. The only thing that CrowdStrike is lacking on is increase in earnings per share. And the reason for that, of course, is that this is a growth stock. And it is just now starting to be cash flow positive. Here's the things I want to show you about CrowdStrike. CrowdStrike has a return on equity of about 8%, which is excellent. It also has cash flow about 0.70, about $0.75, which is excellent. But here's the key for a growth stock. The sales are up 70% this quarter. They were up 74% last quarter, and they're up 68% the quarter before. So this is just breaking records in terms of sales growth. You always want to look at a stock that has huge sales growth, and this is definitely the case with CrowdStrike. So I do think that CrowdStrike is in a very good situation. I do think it's going to go higher based on that because the sales are increasing, the profit margins are good, it is not losing money, and another thing I want to indicate here, 48% of the owners of CrowdStrike are funds, and so that is a very good thing. Typically, a stock will make its biggest moves when it's owned 20% by funds up to about 60% by funds, and that in the past typically will create the biggest moves in the stock. So I definitely think this is a good place to be in a CrowdStrike. But remember, like all stocks, you just can't buy the stock and then just hope that it'll go up. You've got to set that stop loss. And I typically set the stop loss when I'm going in at about 3% less than where I bought it. And then as it moves up, I move that stop loss up. But if the stock moves down, I don't move the stop loss down. I just keep the stop loss where it is, and I try to hold all my losses. And this is the key, to less than 5%. So that's a very, very big deal. And but I definitely think CrowdStrike is great, and I think it's a very good time to be in it. All right. Did it close well? Oh, let's take a look. Let's see if I don't know if we're at the close yet. I think we are for in. Let's look at Nvidia. Let's see how it closed. And it looks as if we had a pretty darn close. I think we're not quite at the close yet. We're getting there, but it looks as if we're going to have a pretty good close on Nvidia at about 820. That's looking pretty decent. I do think that coming into the 19th, we're probably going to see it move up, maybe maybe about $10 more. But what I'm doing is I'm selling my positions in it right now, getting ready for it to split 4 for 1 so that I can buy it on the other side, which sometimes can be a very good way to go. All right, let's look at PayPal. This is another stock that I'm in, and I do think PayPal is one of the best of the payment stocks. I think it's also another thing about PayPal right now. PayPal is right at in a buy zone, and that's so key. That's so key. If you buy stocks right, and that's basically buying them at or above the buy point, then you just increases your chances of doing very very well in the stock. The buy point on PayPal is 296.03. So at 296.03, that's where you want to start looking to buy it. It's currently at 302.97, definitely within the buy range. And basically, PayPal is, if you're interested in getting into the stock, and I do think it's excellent, by the way, and I have it, um, I think you're basically good up to about 311.50. So 311.50 would be the top of the buy range, but I think you could definitely get into it right now. It's an excellent, excellent stock, and I think that it's looking very, very good. It's got what they call, and the pattern recognition doesn't actually see it, but it's called a double bottom pattern, which is a very good chart pattern. Now on the pattern recognition, it's showing a cup with handle, but really it's a double bottom, and I think that that is a excellent, excellent um, pattern to be buying on. So very, very good. All right, let's look at L Brands, and of course, if you've been following along with me, you'll know that I've been buying L Brands. It's one of the best areas. It's retail apparel and shoes. Can you believe it? Shoes. But everybody likes shoes. I mean, my girlfriend especially does. She loves them. It's pulled above the buy zone, so it's a little extended. This is not necessarily the great place to get into it because it's a bit extended, but this is looking pretty good. It's up about $3 today, and this is L Brands. This has been a very, very strong category. It's the retail apparel, shoes, and accessories area, and I kind of want to take a look at this area now. I look at the sectors to see what are the leading. I try to get the companies that are the leaders in the sector. Now, currently, L Brands is the leader. Okay, at least in terms of price, it's up the most of all of this group. So, but Lululemon is in there. The only thing about Lululemon is a little expensive um, for me. I mean, not that expensive stocks will scare me away because believe me, I like to buy expensive stocks, especially when they're right. But I think right now in this retail apparel shoes area, I think that L Brands is looking good. Now, one caution on this. Right now at 77, which it just went after hours, it's a little bit extended. So if you're going to buy it, you want to buy it pretty much at this price. This is about the top of this is about the top of the price that you want to buy it at. You really don't want to buy it a little bit. You don't really don't want to buy it much higher than this. But I think this is a great company, and I think it has some very, very. The chart pattern is looking very, very good for L Brands. Let's see. We have a question here from TikTok, and it's about Cleveland Cliffs. The symbol on Cleveland Cliffs is CLF, and this was, it's been retreating a little bit. It's still, but it's still looking pretty decent. Cleveland Cliffs, of course, is a steel manufacturer, and interestingly enough, since the beginning of the year, some of the resource stocks have been doing very well. Steel has been doing very well. Oil, of course, has been doing well, and of course, that's where I've been in some of these issues. It looks as it looks as if we have a buy point on it of 24.77. Currently, it's at 23.03, so it's definitely moving up. So, could you buy it at this level? Well, I do think you could. What I'm going to do is I'm going to go back to the weekly chart and kind of look at that to see if there's any kind of place that we could enter it, and that's the it's called this is called an ascending base, and it's a very good it's a very good pattern. It's a very good pattern. And basically, what it does is it makes these highs. So the question is, where's the next high going to be? Well, if we draw a line here, this will give us the upward bounds of it. So it looks as if this ascending base is holding, we're likely to move basically up to about 26. Now, I don't know if that's going to happen, but in the next month or so. But there is a buy point on this at 24.77. So if you're looking at Cleveland Cliffs, this is not a bad place to enter the stock. Now, if I did buy the stock at this, and I don't own this stock, by the way, I would be setting my stop loss right about at 2083. That's where I'd be setting my stop loss, because because this thing is likely to thing may pull back again, but it did. But now it pulled back. It tested the 50-day line and it's bounced upward. So this Cleveland Cliffs is looking very, very good, and it's in an excellent group. The Steel Producers Group is 13 out of 197. Now let's go just for fun. Let's take a look at what the leading sectors of the stock market are right now, where the money is going. That's the key. You always want to be kind of it's kind of like this. You want to be in an area that where the money's headed. And right now, you know, if we look at the sectors of the economy and the stock market, the number one group right now is, believe it or not, the oil and gas, E&P companies. This is the number one group. This is one of the reasons why I was looking. This is one of the reasons why I acquired XEC today, because this is an area that has continued to show strength, and it's been strong basically for the last 4 or 5 months. It's just been very, very strong, and it just bounced, and it looks like it's going higher. It's got a relative strength of 99. This is the number one. This is the number one area right now in the stock market, is U.S. Oil and gas, U.S. exploration and production. Now let's look at the top stocks that are in here. And of course, the number one stock is Denbury Resources, and then followed by Bonanza and Matador. Now I've owned most of these. I've owned all of these, but I decided this time, because there wasn't a really good place to get into Denbury or Bonanza Creek, that I was going to come into XEC. And this is one that I kind of am recommending that you take a possible look at. We've it was up today about 13 cents. This is not a terribly expensive stock. $74 is the share price on this one, but there is a buy point of 74.92. Now currently it's a little bit off of that, so it's a little bit below that at 74.27, but it's still buyable at this level. And this one might be a good one to get into. They're going to be merging with CPE, Callum Petroleum, and also another very strong one as well. So that might be something that you might want to look at. Is this your portfolio? Well, I think I showed it. To you. Okay, let's take a look at Shoe Carnival. And as everybody knows, I do have a spread on Shoe Carnival. It's going to be splitting 2-for-1, and that's going to be on July 19th. So let's look at Shoe Carnival. It's SCVL. SCVL, and that's been in the very strong. You know, it's odd, but you know the apparel group has been doing very well, and especially the shoes. And so this is kind of one that I think is going to do well. This, you know, you wouldn't think it. I mean, I shop at Shoe Carnival. I mean, that's where I got my Chuck Taylors, and I do like it. But you know, it's nothing really special. You go in there and they've got a lot of shoes, but shoes seem to be doing really well. I have Nike. You know, Shoe Carnival seems to be doing good, and it's moved up again today, and I do expect that it will tomorrow as well, because we're coming into this. We bounced off this 50-day line, and it just seems like we're moving higher up until the 2-for-1 splits. Just want to see if there's anything kind of unusual going on today. It's got an 88 checklist, really, really good. The only thing about it is the earnings per share could be a little bit better, but they're still pretty good. Everything else is good in here. Relative strength, accumulation. It's being accumulated by the funds, for instance. So that's very good. It's got excellent earnings per share, excellent sales, current price is above $10. Basically, it's looking pretty darn good. The the ownership in this, and it's got a surprisingly large number of funds, considering it's a shoe store. I mean, it's not like they're changing the world. It's a shoe store basically, but there's 336 funds in it, which is excellent. Relatively small cap on this one, but I do think it's moving higher based on my chart analysis here. So, a bizarre stock. I happen to hold a spread on it. I did close my put spread, but I have a call spread as well, and it just seems to be doing very well. I'm going to be closing that probably by July 19th. I'm probably going to be doing it by then. Thank you, Kate, very much. Let's look at Apple, and thanks for that question. That's really a good stock to be looking at right now. It just seems like the big cap techs are getting a lot of love. Probably everybody knows that I have it. I have kind of a marked up chart here, but we are basically right above the buy range. The buy point on this 137.07. We're currently at 144.49 after hours. It is still buyable at this level, but I caution you because if you want to start accumulating a position at Apple, and I think by the way that's a very good thing to do right now because they are looking good. This is a good place possibly to be in it. I wouldn't buy it too much above this just because a little too much above this and it'll be extended. And we don't want to buy stocks extended. That's the main thing. We want to buy them at the proper buy point up through the buy range, but then once it gets above that, we want to be careful and we don't want to accumulate above that because it's extended. And here's the thing. The way stocks move is that they move up through the buy point above the buy range, and then when they get extended, sometimes they'll pull back. Now, they'll typically will only pull back to the buy point, but we don't want that to happen. So we want to keep within 5% of where the buy point is. So anytime there's a buy point that I'm giving out, or anybody else is, because it's not just me, it's on a lot of other websites too. This buy point is you take the buy point and then you multiply that times 1.05, and that'll give you the range that is best to buy. And you always typically want to buy as stocks are setting up. And currently, with Apple, it has a beautiful setup, with a base on base cup pattern, which is a very, very good pattern. This is not a speedboat. This is not an extremely fast stock, but it is very, very good. Now remember, this stock split 4-for-1 back in August of 2020. And if you were watching me at that time, I don't even know if you were at this time, but if you're watching me, you know that we did very well into that split because we did the program of basically buying it into the split, riding it up to the very peak, selling, then waiting and for it to come back. Now, this stock did not come back as well as Tesla did, but it did very, very well. And I think now we're starting to see, people are starting to say, wow, even though this stock is a $2 trillion stock, which is, that's unbelievable. I can't believe that. It's still good because they have look at this. Look at these profits. I mean, this is a giant company. This is not a small company. And yet they are producing just incredible numbers. Their sales were up 54% last quarter, and their profits were up 119%. So they're basically almost printing money. So I think Apple is excellent. I think it's a good time to add here, Kate. I wouldn't add too much above this. I really wouldn't add too much above this because if you do, then you're going to be extended. But this is a good place to add, Kate. And I think that you do very well to do that because you're likely to be very successful if you do it that way. So thank you very much for that question. Let's look at space of the future. Now, you probably saw my TikTok about, as you know, I've traded Virgin Galactic quite a bit. It's a very, very spiky stock. And everybody says, well, why, Jim, did it go down today? Well, because they had that successful launch and everything was really great and, wow, it was going all great. But guess what? They announced that they're going to basically dilute the stock. So they're going to they're going to have a secondary offering of the stock. So don't expect this stock to move up in the near term. Now, I think this will bottom, but they're almost doubling the number of outstanding shares. So let's see if I can find exactly how many outstanding shares we're looking at. But right now, currently, there are the float on this is 206 million shares. But I think that they're going to issue something like 50 million more shares, which is an awful lot. I think it's almost 20% of the total float. So expect this to move down a little bit. It has moved up a little bit of after hours, up a little bit, but I still think that we want to see more strength on this. I want to see it, I want to see it trade for a little bit and see how it digests this new stock offering. But I definitely like it, and I think that in the future, in the not too distant future, we'll know exactly kind of what the trading range is on it. So this is one definitely to watch this. Now, currently, this is a very speculative stock, of course, because it has no earnings. But it did have a successful space flight, which is incredible. And this will be a big industry. I have no doubt about it. We'll see how Jeff Bezos does with his Blue Origin, but this one is the pure play because this one is actually a stock company that you can buy. So, interestingly enough, I think Kathy Woods has quite a bit. Well, I think there are some funds that are heavily invested in this one. But anyways, there was the secondary offering that did produce a little bit of a pullback. Now, if you'll notice, and I don't know if you can see this or not, but the funds, there's about 14% funds in here. I think that this probably will go up once they've proven their model. But right now, of course, they're losing money because, of course, they haven't started accepting actual paying customers. I mean, they've accepted them, but they haven't launched them yet. But they do have a lot of deposits, and I have no doubt that they'll be successful. But I think we don't want to buy it right now because I want to see it pull back. I want to see it form a base, and then I think it's possibly a good time to get into it. But right now, I think we've got to be careful with Virgin Galactic. Thank you. All right. Well, Gate. Okay, Tesla. Let's look at Tesla. Tesla, is starting to wake up. It's sort of, wake the dead, I guess. No, I love Tesla. Tesla was my best stock last year, and I think it was like tenfold increase in it. And I was on margin heavily during periods last year, and it was the gift that kept on giving. So I love Tesla. It's just I'm not in it right now because I still think it's basing. And what I mean by basing, of course, is that it needs to kind of stocks go up and then they need to rest a little bit and then they continue their upward journey if if they have the right stuff. And I definitely think Tesla has the right stuff. I really believe it. But right now we have this kind of this. It isn't really a true. It isn't a true pivot here, but it does look like there's a ceiling at about 705, and I've been saying 680 to 705. I still hold within that range, but I just want to see a little bit more conviction. But I am looking. This is on my watch list. The relative strength is still a little bit too low for me. I want to see a relative strength basically of about 80 here. I want to see that. And if that can achieve that and it moves above about 705, I'm probably back in a big way because I do like the stock and I do really think it's terrific. Here's the issues right now with Tesla and the reason I personally am not buying it right now. It's over 15% off of its all-time high. Now, that to me is a very, very important number. Why? Because that is a number in which we want to see things move to a higher high, and that's very, very key. So by doing that, let's see if I can get my calculator up here. I'm going to put the calculator on here right now. So what I'm going to do is I'm going to change the view here. Hopefully I can do that, and it won't get in too much trouble. There we go. So I'm going to share the screen out here with the calculator. This is kind of to show you kind of how I'm doing the calculation. So here's the thing with Tesla. As you can see, I do believe that right here right here at 705. I do believe that is the resistance, and it's moving very nicely to that area. The question is, here's the thing: we have the all-time high, which is about 906. So if we take 906 and we subtract 705, which is where I think, you know, would be probably the earliest entry that we get about $201 dollars. So if we divide that by 906, which is the all-time high, we're going to get about 22%. I want to be at about 15% really in order to start buying again. Now that probably would be about 780 here. So let's see if we can do that. Now, but I still believe in Tesla, and getting aggressive on it if it moves above about 705 might be where I re-enter it. But if we do it strictly on the numbers, we want to go in. We want to go in at basically 85% of the all-time high. So we want to be starting to look at it at about 770. Okay, so that's really kind of where our watch list needs to be. It's about 77. So what I'm going to do here is I'm going to move this, and I know that I seem like I'm moving the goalposts, and I sort of am, but based on my calculation, I think it's very important that we are right at about 770. Okay, so that's about 770. So what I'm going to do here, this is the reversal line, so I'm going to delete that reversal line. I'm just kind of change it up a little bit here, and put the reversal line in at about 770. So that's right at about here. And I'm going to go ahead and set an alert on that line. Oops, no, that's not quite the right thing. There we go. There we go. I'm going to set an alert on that line. And basically, that's kind of where I want to see it move above that. And if it can move above that convincingly, then I want to jump in and ride it up. But we want to be within about 85% of its all-time high. That's really going to give us the best bang for the buck in terms of appreciation. And that's really what we're looking at here. We're looking at, we're not looking at buy and hold, though that can be very successful for a lot of people. What I'm looking for is I'm looking for when the stocks make most of their moves in less than about 15% of the time. So what we're trying to do is we're trying to move to the stocks that are moving the best. And that's the reason why I look at these bases and how it's accelerating, and jump in, ride it up, push that stop loss up, and then if it pulls back, then we're in for some profit. So that's the thing about Tesla. I do think it needs to move a little higher. I really do think it needs to move a little bit higher in order to get to a good level. All right, how do you find the buy point? Good question. Well, there's a number of sites out there that you can find the buy point on. And I highly recommend taking a look at a site called Earnings Whispers. That's the name of it, Earnings Whispers. And I can show you that on the, and that's a way, if you don't have the software that I have, that you sometimes can see, these buy points. So Earnings Whispers, E-R-N, E-A-R-N-I-N-G-S, Whispers. So this is you can get into the site. It's a free site, though they have a paid version of it, and it does have, and I'm going to show you this on the screen right as we speak. This is sort of how it looks. This is how the site looks. But we can go to let's go to a stock that everybody's interested in. Of course, that is Tesla. So let's see if I can get to the Earnings Whisper on Tesla. So I'm going to put in here, and that's TSLA, and that's this, and then this is basically going to show us something called pivots. All right, I don't know if you see this, but these basically is areas of resistance. Now, currently, there's a pivot at 653. It's right above that, so it's probably going to move to this next pivot, 667, and then so on and so forth. But really, we have to get to a level, and if you can see it right there, yeah, there it is, 776. You see how that is right there? See how that's marked right there? Very interesting. That is showing where it's 85% of the all-time high. So this is a kind of a good little cheat sheet that you can use. You can kind of see how things are looking. Right now, for Tesla, the recommendations are basically, well, we seem to be looking at an average target price from the You know, from the experts, you know, basically it's down. It's down here at 70. But anyways, don't belabor the point. This is Earnings Whispers. It's a nice little site that you can take a look at, and it will show you the pivots, and that can be very key when you're looking up things. But right now we're within about 15% of the all-time high. We need to put in about 15% to the all-time high before you really be back in Tesla. All right. How about Apple? Okay. Thank you very much for following. I do appreciate it. Here's somebody that is asking about telephone. This is probably one of the worst stocks. I'm sorry to say this. It sounds like I'm being judgmental, but I'm not. My brother worked for AT&T. Telephone, or T, I think is one of the worst stocks out there. I really do. They actually had to cut their dividends. I think their management is terrible. It's John Stankey. He's right here in Dallas, and they just haven't been getting the job done. But it doesn't matter because so many people own this stock that it's sort of like a mutual fund, sort of like a mutual insurance company, and it's basically you can't get rid of them. So this has a relative strength of 15, which is horrible. I'm sorry, it just is bad. Let's look at the overall performance over the last few years. This has just been, you know, I mean, you would have been better almost with your money in the bank. Terrible, terrible, terrible. I just, you know, if you have tea right now, do yourself a favor, sell it, buy something that's going up. Maybe PayPal, that's a good one, or maybe Roku. Just, I don't think you want to stay in telephone. It just isn't that great a stock. And you know, it's nothing personal. Just don't think it's that good a stock. Let's see if we can take another question. Oh, great. Hey, good question on figs. This has been a great stock. I'm not in this one, but this is a tremendous company. It's called Figs, FIGS. They're a apparel company that makes scrubs, and they're just lighting it up with their IPO. And this is their IPO. Just showing you the daily chart. It's very interesting stock. It's very volatile. I mean, the buy point on this one, you know, basically was 38.09, and it's currently at 44. Can you buy it here? Well, I'd be a little. This one is going to be a little bit tough to own. I'll be honest with you. And it's been pulling back, but it just bounced. So this might be. I wouldn't recommend getting in this with that much because it is an IPO, and it isn't as stable. It's a lot more. It does have a lot more volatility, but this is one that's not bad, and you might want to put this on your watch list. The most important thing about this is uh, if it will pull back enough. So I would be a little bit careful with figs. I really like the stock a lot, but I think you have to be somewhat careful with it. Well, I have yammered on and on. Just want to talk to everybody about the Action Trailer. It's very, very easy to do. If you're watching me on TikTok, super easy to get on the Action Trailer. It's all you have to do is go to go to my profile, click on the link, and then just need the first and last name and email address, and you'll get on the email alerts list. We do send these out several times a week. Sometimes we have great trades. I did put a very nice Wells Fargo trade, earnings trade out. It's an options trade on Friday, but hopefully I'll have some more this week. I'm looking at possibly doing one on potentially Morgan Stanley or some of the ones that are reporting this week. So it can be very, very good. And I probably should put out the great stocks under $10. Now, you've probably heard me say that I don't like to buy stocks under $10. That is true, but sometimes there are some very, very good stocks that are. Sometimes there's some very good stocks that are available in that. And I'm going to try to put out something on that. Well, I've come to the end of an hour, so I will be signing off at least for now until tomorrow. And so I want to say that everybody, I'll be back tomorrow at 2:30. Happy trading. I hope everything is going well, and I will see you tomorrow at 2:30. So, yep, there we go.